So in this video, I'm going to go ahead and break down the concept of using the three-stage reversal when it comes to either trading or investing in the overall markets. Now, I want to ask you guys a quick question. How many times have you heard the phrase, just buy the dip? Now, obviously, this question is rhetorical because number one, you can't answer me in real time. But number two, most likely this is a phrase that you have heard before because it's a very popular phrase. And so I have a phrase that I made that's very unique, that's not as popular, and it goes like this. The dip can always get dippier. Now, of course, dippier is not grammatically correct, but essentially what I'm saying is that by simply buying the dip, it doesn't guarantee that a recovery is likely to happen. And so what could end up happening when you buy the dip, right, is that there ends up being more selling pressure. And guess what? You end up having this emotional attachment where even when you feel like you should definitely exit out from this trade or from this investment, whatever the position is, you end up holding it much longer because you have this psychological block which causes you to eventually end up losing more capital. And so in this video, I want to go ahead and break down the concept of using the three-stage reversal by first using this infographic that I quickly made today, and then afterwards, I want to go ahead and hop into a real-life example from today. So hopefully this video provides some utility for you, and if it does, all I ask for in return is for you guys to simply hit that subscribe button and also hit that like button as well. So with that being said, let's go ahead and hop into my laptop. Alrighty, so we are staring at this infographic that I designed earlier today. Now, the three stages of a reversal are formulated by three separate sections, just as the name would imply. Now, right off the bat, I want to let you guys know that this is a technical approach for when it comes to trading and or investing. And one of the things I often say, both to the Push and Profit private group and also on this channel, is that you want to use a confluence of data points when it comes to trading and or investing in the markets, right? So for example, let's take a look at this first section right over here, the rejection area, right? So this is where we're seeing the sell-off, and this is typically where you hear the phrase, just buy the dip. Right? Now, one of the reasons why I say you want to pair technical analysis with other data points is so that you have a better understanding of what's currently going on. So perhaps this selling could be because maybe a fundamental reason where the earnings for a company were bad, or maybe the forward guidance from the earnings was bad, or perhaps this could be paired together with alternative data where we see that a lot of individuals or insiders from the overall company are selling. And so whatever the case may be, you want to pair technical analysis with other data points, right? That's one of the things I often preach on this channel and also to the Push and Profit private group. So in the area of rejection, one of the things that you can do is either not buy in at all or simply buy in but with a minuscule amount. So for example, I mean, you could be trading with $1,000, $10,000, $100,000, whatever the case may be. Simply break up your position. So let's just say in this scenario you're trading with $10,000, right? So instead of going all in with your 10,000, right, you just put in 10% perhaps, and of course you could go ahead and adjust parameters so whatever fits your needs, and it could be 1%, it could be 10%. Of course, it's going to vary for each individual, but for this scenario, let's say 10%. So you put $1,000. So now you have some skin in the game, but it's not too much. It's not your entire position where then you get trapped with this emotional and psychological block where when it starts falling down, you end up freezing, right? It's just a small minuscule amount. And so if it continues falling down, well, it's not terribly going to impact your overall account because it's such a minuscule amount. And so you could feel comfortable with exiting out the position if you feel uncomfortable with the position, right? And so that's something that you could do. Either not take the trade or enter into a position, or enter with a minuscule amount. Then we enter into the area of consolidation, right? Now, consolidation, when it comes to the stock market, just refers to a period where the price of a stock moves within a narrow range, right? So for a certain time, during this phase, buyers and sellers are in an approximate equilibrium, right? And that forces the price pretty much to move sideways. It's pretty much balanced out, right? And so this often takes place after a significant price movement. For example, after a lot of selling, you may enter into an area of consolidation, and it's kind of understood that at this area the market's taking a breath before possibly moving in another direction. Of course, it's because we have buyers and sellers, and so when you have a lot of volume relative to price, that means that basically the order books aren't going to move in a big dramatic way, simply because people are buying buying and selling at the same time. So it's moving sideways, right? And so this is an area where if you are already with a minuscule position, you could, consider adding more, or maybe you could wait out, right? And so at this area, maybe you add, again with this scenario, another $1,000. So now you're building in your position and you're kind of averaging down. You bought in at 1,000 somewhere over here. Now you average in with 1,000 over here, right? And so that's something that you could do. Or you could go ahead and wait it out and not even buy into the rejection area, and maybe add your first 1,000 in the consolidation period. That's actually preferred, but of course, at the end of the day, you could start a minuscule position even in the rejection area. Again, it's not going to be perfect. I don't know how many times I've taken a trade and my entry wasn't perfect, but you don't necessarily need to have a perfect entry and exit. In fact, I actually discussed within the Push of Profit program that you could actually have a losing win rate of actually 35% and still become a profitable trader. But that's for a separate video, and actually that's something that I mentioned exclusively in the Push and Profit private group. And so, staying on topic, right, without deviating, one of the things that you can do is wait for confirmation, where you start seeing that the uptrend is actually taking place, and this is where you could kind of scale in and add more to your position. So as it starts moving upwards, well, now you could feel more comfortable that price action is actually going upwards. So you could start adding a couple more thousand, and then identify the area where you want to go ahead and take profits. Or if this is a long-term investment, obviously you do what you will with that position. But with that said, I want to go ahead and take a look at a real life example. So right over here, we're looking at ticker symbol BABA for Alibaba, and right here we see a very textbook example where right here we see a lot of selling pressure. And why did we have this selling pressure? Well, for this scenario in particular, it was a multitude of different reasons. For example, there were some fundamental reasons, and then of course on top of that, we also had some economic data come out earlier today that wasn't favorable for the economy, and so we ended up seeing a lot of selling, right? Again, I always say you want to pair other data points with technical analysis, and so that puts us in this area where we're in this rejection section, right, where we end up seeing selling pressure take place. And this is the area where you could either sit out, or if you want to add some skin in the game, take a minuscule position. And so we see Alibaba, or ticker symbol BABA, was selling off, and then towards the middle of the day, we start seeing this sideways movement where we're not really moving drastically up or downwards. We're pretty much consolidating, and then eventually we break above and we start seeing this upward trend where we start moving upwards. And so this is where you could start adding into your position and scaling upwards. Now again, this doesn't just have to be on a small time period. If you're just trading, you could also do this for long-term investments. Again, I always say when it comes to trading or investing, you want to look at multiple data points. But let's say you wanted to scale out and look at a larger time frame, right? We see if we scale out from a 15-minute view to a weekly view, we see something very similar. Again, it may not always look identical or perfect, but you could see this pattern basically repeat itself even in a longer time period, right? We see again this area of rejection where we start selling off, and instead of putting your entire position right here, just buying the dip, you could either just hold off or add a minuscule amount, and then we see this sideways movement where we're not moving drastically up or down, which is the consolidation period, and then we break above, right? And so this is basically that area we start seeing confirmation, and we see that uptrend take place. So again, this is just an example of how you could take advantage of the 3 stages of a reversal to go ahead and put it in your favor. Now, is it always going to be guaranteed that once you start having confirmation of an uptrend that it's going to absolutely go in your favor? No, nothing's guaranteed when it comes to overall trading and investing in the overall market, but it puts things better in your favor, right? You have better odds than rather just adding in your entire position, just simply buying the dip. And so hopefully this video provided some utility for you guys. Again, make sure to like this video and subscribe, and also check out the links in the description below. There is a link to join the Push and Profit private group, and there is also a link to get my free weekly newsletter. So definitely take advantage of the links below. And with that being said, guys, hope you enjoyed this video, and I'll see you guys on this next video right over here. Take care, guys.